Hello, welcome to Things Invest. We'll talk about investing, finance, and professional one. As a recording time of 11:50 a.m. on Eastern Time, Ethereum currently trade $2,420. That's about 5.8% so far. On over crypto markets, see that clearly the key coins, Bitcoin and Ethereum, are both down respectively, close to about 4.5 to 5% so far. It seems like the negative pressure is still percolating as the day do rate, despite there's a lack thereof on the media front. And on the altcoin side of the house, it's a little bit more severe, knowing the fact that they're more prone to volatility. And when there's a sell-off, they typically would be, taking more of a bigger severity in comparisons to more of the more reputable or more established coins, if you may. So with respect to an altcoin side of the house, I would say collectively, on average, we're down about close to 20% so far. Some are a little bit more severe than other. Obviously based on their own technical support level that we're trading purely on at the moment. It seems like fundamentals are pretty much out of whack right now. We're just basically trading purely based on the emotion, and with that emotions translate into technical support based on market sentiment, right? And collectively, based on my verse video that I posted this morning, in a chronological perspective, last week was a relatively volatile last week. Knowing the fact that ever since the MLK holiday in the US, we subsequently have heard a lot of negative news chronologically on basically a consecutive daily basis, right? Firstly, from the potential impeachment of Boris Johnson in UK, to the Russian crypto ban news that happened, to the negative earnings report coming out from, obviously some of the large cap tech stocks, and also with the weekend affectation. Next week's going to be another volatile one, I would say, right? We are expecting to have two specific catalysts, and these are revolving around on Tuesday and Wednesday, as we are, having a big event coming from the Federal Reserve, as we're going to get more guidance on the economic outlook from Jerome Powell from the central bank. Obviously, we know based on what Jerome has said before, and also being confirmed or supported by the major banks in the US, like Goldman Sachs, and also with respect to JP Morgan, Jamie Dimons also said 2 Mondays ago that we're expecting to have about 3 to 4 interest hikes in this year in 2022, 2 in the subsequent year, 2023, and then 2 in the subsequent year in 2024 as well, right? In addition to that, we're also going to be expecting some of the, large cap stocks earnings to be coming out this coming week as well, coming from Apple and Microsoft. And these are relatively sizable macro drivers because Apple has a really large market cap. And if we see anything that triangulates to more of a negative sentiment from the management team, we will technically see more sell-off across the tech sector, specifically on the more severely on the small cap, large growth stocks as well, right? So next week is going to be another volatile one, but I would say collectively, probably not as severe in comparisons to what we've seen last week already, because technical supports is indicating that we are oversold on all levels. So I wouldn't be surprised if we see some sort of a rebound next week, but obviously we're going to have some anticipatory pressure, knowing the fact that the Fed meetings on Tuesday and Wednesday. And I think based on our last meeting that we've had so far from Jerome Powell, the anticipatory pressure was a negative one ahead of the meeting. And as we heard the meeting from Jerome Powell, because of the fact that his verbiage aligns with Wall Street expectation and subsequently rally from there, right? Before obviously the crash that we have seen last week, right? So I foresee something comparable that's going to be happening. In terms of the market sentiment, I didn't see any, significant changes so far, besides coming out from the international side of the house, from Russia, right? But I think with respect to U.S. specifically, if we are going to be, in alignment with what Wall Street has been saying so far, 4 interest hikes, while the market's trying to make the adjustment for it, I think most of the affectation has been pretty much baked in so far, and I think this is just the technical speaking the truth, that right now just a lot of uncertainty and fear without any logical support on the technical front, that my gut feeling is that it's going to be a positive one next week. So we'll see how that goes. Ultimately, I'm not a wizard. I do not predict the future, nor do I have the power to. So something to think about. But in terms of taking the risk right now, I think it's the logical one. And just take a look at the media front. Again, it's very logical that it's not the most active day today on the media front, but it is something we have to be watching out for. Obviously, as we are investors that are diligent, and we have to be keeping a close eye out on it, especially with this volatile market dynamics that we're seeing collectively right now, right? So that's pretty much on the news front. Let's just dive into a technical analysis with respect to recording time of approximately noon time on the Eastern time. Ethereum contract $2,438, down about close to 5% so far. Right now, we can see clearly that the severity of the Ethereum price level have bounced from the 2,300. And the reason we got there is because that's a flat number, right? Like 2,200, 2,300. And the real level that we technically will have support at the moment will be somewhere around like the 2,450, right? The next level we need to get back up to revive back to normal is about the 2,625, or technically the 2,750. But that level is obviously not as supportive as in comparisons to the current level that we're at right now. And at the same time, we're very, very oversold with the 22 out of 70. So this is way below the threshold of the 35 out of 70. So that means a lot of people actually sold on a loss, which is obviously makes sense why that is, because people are, having that fear mongering, that uncertainty feeling. They rather sell on a loss than to hold logically, because obviously the news that came out from Russia is definitely a worrisome one, right? But for those that believe in this long term, right, you're not guessing, you're not double guessing yourself by selling because you think it makes sense to do so. But if you think logically speaking, the risk is lower in comparisons to days before, and obviously months before when we were surging all-time high. Now the price is actually depleted to a relatively fair level, right? Not even the fair level, we're at the steal level, way below the steal level at the moment. So I think being more aggressive right now while everybody's panicking is the logical move to do, right? And I think 2,150 could technically be the very, very rock bottom, and I give that as a huge doubt. That breaking 2,000 to the next level of 1,750 would be a really big stretch, to be honest with you, because we are very oversold right now, unless we hear more negative news coming, and already knowing the fact that we've been selling off for basically weeks now, it's just not logical to me. So hopefully you guys are thinking logically and not making any irrational decisions. And I apologize if I was away last week. It's important that, sometimes if you don't do anything, it might be better than you try to do something to overcompensate for something that you have no control over, right? Ultimately, macro affectation are things that are sometimes out of your control because you do not control the world. The world doesn't revolve around us. So, and how do we protect ourselves is to maneuver through the risk management levels that we identified so far, right? So hopefully that's helpful. With respect to Bitcoin right now is at 35,000, basically bouncing from the 34,000. That is the technical support level. Right now, the 20 out of 70. So Bitcoin's even more oversold in comparison to Ethereum. And I do love Bitcoin at the moment right now. I think it's very, very oversold. It's way oversold than expected. And we see like going back to 30. I think that's a huge stretch because of the fact that we're at the 20 out of 70. I don't really see us going down further. Absolutely not below to the 20,000 again. I think that's really, really, really difficult to get there because that would require us to sell down at least 10 levels below. At the same time, we're already oversold, unless corporate investors all collectively decide to sell on a loss. But how likely can that happen? I think we should just take the logical move by incurring risk and hold for a long term. Because you didn't buy into crypto because you are gambling or you are guessing or second guessing yourself. You bought in because you believe in the long term fundamental of this asset, right? So hopefully you guys are thinking clearly and mute out all the BS that's outside of your control and just stay within your frame of reference by dollar cost averaging logically. Dogecoin is at the basically 13 cents at the moment. Right now, the 30 out of 70. So anywhere from current level all the way to the 12 cents is still logical in terms of risk mitigation. Cardano is basically hovering above $1 ever since the bounce from the 92. So anywhere from current level, I would not really touch the current level at the moment because we're still at the 38 out of 70. So it's definitely not as oversold in comparisons to other ones. I do like it when we're below $1. So anything from $1 to 92 is still relatively logical. Solana is down about 23% at the moment. Very crazy right now. I like it when we are depleted below 30. So we're at the 21 out of 70. So right now, anywhere from current level to the 87, which is the technical bottom. But the real bottom that we know is basically at 66, right? So remember, right, 133, 113, 66 is still the logical level for us to dollar cost average at. Right now, we're basically levitating in between the levels, obviously, because we are approximating from the 100 mark, which is a flat number, but not a substantive level. So hopefully you guys are capturing that. But taking a logical risk right now is not terrible because we are very oversold at the moment. XRP is down about 13% right now. We are testing at the exact level that I've identified so far at the 57. We crashed below that to 55, but 55 is not a logical level. 55 is basically a flat number that people feel comfortable buying in. We're at the 22 out of 70, so very oversold as well. So I do like the current level. Polkadot is down about 17% right now. Holy Jesus. We are at the 22 out of 70. Anywhere from the current level to the 1620 is still a logical level. Polkadot is basically retesting the previous levels, but if we crash further, let's just say we go back to the 20s on the RSI scale, we have a shot of actually going to the 10, which is the rock bottom from here. Algorand's down about 20% at the moment. With respect to current level, we are basically hovering above, below the $1 mark, but above the 90 cents mark, right? With the 26 out of 70, so rock bottom technically, because of the fact that we reverse back up, indicates that 79 or 80 was the rock bottom for Algorand. Shiba Inu is at the 1983 right now. Anywhere from the, again, right? I do like the current level. We are below the low 2000s. We are basically in between the levels of low 2000 to the 1400s. 1400 to 900 are the frames that will go down further if we're going to go down further with the 25 out of 70. So it's logical to incur more risk if you believe in Shiba Inu for a long term, but I would not go too aggressively because we do have a relatively sizable gap here. So anywhere from the current level to the 14 to the 900 from here. MagTech's down about 10% so far. Very oversold at the 29 out of 70. You could see that was a flash crash that happened. That means a whale manipulated us, selling off from the 152 all the way to the 69. That completely crashed the market from there. And whoever bought in at the belows, congratulations to you on buying the dip. And right now, it's I would not really touch this because of the fact that we're still at the... It's okay. It's like at the 30 out of 70, but in terms of other levels, I would say anywhere 143 to 120 is better levels. AVAX is down about 10% at the moment. I would say anywhere from the 60 to 50 is still better level for us. With the 26 out of 70, so it's not terrible. I would encourage anywhere from the 59 to 50 from here for AVAX. Luna is down about 3.72% at the moment. I like the current level. 62 is the resistance level that we identify. 52 and 45 from here with the 37 out of 70. So I would ideally touch at the 52 to 45 from here. In respect to risk management level, these are the levels I identified so far. So hopefully this is helpful. I made some revisions here and there just to tee up these numbers a little bit more. But I think obviously with the panic and uncertainty that's in the market at the moment, taking the logical risk and holding for the long term is the best policy for us to not make any emotional decisions that will, cause us to be selling on a definitive loss, right? Right now it's just a paper loss, so just hold it for a long term, believe in the long term vision, and you'll be fine. So this is my second one. Hopefully this is helpful. Hope you guys have a great weekend as well, and take care.